Silver is on an absolute generational run. And honestly, it's hard to explain. But I took a deep dive today and I'm going to dive into everything that I am seeing and why I think that this is an early recession warning. Because usually it's looked at as, hey, gold is sometimes that hard asset that's looking towards a recession. But I like to look towards silver. And I'm going to explain to you all why I believe that that is. But first, let's dive in to what we're seeing from silver because it's absolutely insane. I mean, I made this thumbnail and this thumbnail is now even out of date because it's up 182% because it's just insane how it's been getting out of hand on silver. But I mean, if you look back, gold and silver stimulus checks, right? 2 years ago, gold and silver bars were being sold at Costco for $2,000 or $2,079. It's literally doubled in value. And now we're reaping rewards in the stimulus with the metals rally, right? So Costco was selling all of this $200 million of gold bars monthly back then. And that should have maybe been a signal for everybody at that time. Like, all right, hey, you know what? When it's push comes to shove and we're looking at all of this, well, if Costco is selling gold, what the hell is going on, right? What kind of Costco seller is really trying to buy gold, right? But I think this silver situation is really interesting because if you really break it down, silver has a smaller market cap than gold. And sure, that might be obvious, right? Silver has that smaller market cap towards gold. But what I do think is that if you look at all of the latest crashes, the major ones, you had the 1970s stagflation, you had massive amounts of inflation towards the end of the 1970s and the early 1980s, where right before Paul Volcker rose those rates to 20%. Well, because those times are very similar to right now. I've been looking at a deep dive here in silver, and maybe I'll publish more deeper of a dive here about that in a video. So make sure you guys are subscribed so you can see that. But if you really break it down, silver led all the signals during that time. It wasn't gold, it was silver. And when you always look at the gold and silver ratios, right? Historically, at the beginning of this year, silver was up around 100 silver ounces for 1 gold ounce, which is historically very high. Usually it's around 60. And when we see massive amounts of drops in that ratio, the gold to silver ratio, that's when we start to get worried here. So, what did we see here recently? We've seen silver absolutely explode. So, I think it's not just this silver narrative, it's also what gold is doing because gold is moving, sure, but it's not moving as quickly as silver, right? 2025 has been our own assets or be left behind. This is the year where all assets have been pushed higher. I mean, look at this. The S&P 500, even from the S&P 500 lows in April to where it is now, that's a generational run. We've never had the S&P 500 go on a run like it did starting at the lows in April coming in there. But gold and silver have been just insane. They're up 4 and 8 times as much as the S&P year to date. That's crazy. And then the US dollar, we're going to go over that, the Dixie, but it's down like 9% on the year. It's the worst year since 2017. And honestly, if it didn't have a little pump here not too long ago, it would have been the worst year since 1973. So those 2 years are very, very far apart, obviously. And what happened shortly thereafter was honestly very different, right? In 1973, we had stagflation, like I'm lining out, one of the worst years for the dollar ever, massive amounts of inflation. 2017, not too much happened to write home about, right? We were a couple years away from basically a global economic shutdown, but Powell did see some weakness at that time, so he started to raise rates in 2018, 19, and immediately got them pulled back. And that's when, the whole world economy shut down. So that was a little bit different of a time, to say the very least, of course. But The weakness of the dollar is something that we got to be tuned in on, right? Because that's key. On December 12th, Trump was asked where he wants the Fed chair to be interest rate. 1% or lower than that, right? Everybody, they all know that Trump wants very, very low interest rates. Everybody, even like I'm going in and I'm talking to people, I'm talking to restaurant owners, and they're like, don't worry. I don't want to buy houses now. I want to wait. Trump's going to get his guy in May. They're going to lower interest rates. That's what everybody seems to be waiting for. People with money on the sidelines are waiting until Trump gets his guy into lower interest rates. And that's what everybody, I think, is just praying on that's going to happen. Once interest rates get lower, that's when everything's going to be better. I don't think that's necessarily the case. It's going to send assets skyrocketing in flight, of course. But is that going to be an overall net positive for the economy? I don't know. I'm iffy on that, folks. I'm definitely very iffy on that. So when you keep diving into what is going on here, the bond markets are doing something very interesting, because since the Fed began cutting rates in 2024, bonds have failed to rally, right? They're down 12% since then. And look, I get it. The bond market is trash. Nobody's buying bonds anymore, but everybody is selling government debt, which means people are losing faith in the US dollar. And we're seeing it in the Dixie. We're seeing it in all the different analysts. And this is why I think, I cover this on my other channel, but it's why I think, stable coins, and we've seen that push for that. That's for a completely separate video. But, we're seeing governments sell United States debt for the first time in a while. And it's because they're losing faith in what's going on in the dollar. Long-term inflation is expectations are remaining elevated. And this is something else too, folks. If they're losing faith in the dollar, right? They're starting to do trade in different currencies, and they're moving away from all that. But meanwhile, central banks around the globe have been buying a bunch of gold. I mean, China's been buying a shit ton of gold since 2020, but other central banks are starting to fall in. 2022 and 23, Goldman Sachs saw a 5-fold increase in central bank purchases of gold. Q3 25, China's central bank gold purchases were up 39% month over month and 55% year over year. So even though China has been buying gold, right, since 2000, they dramatically increased all of that. So what does that mean? That means we're seeing massive amounts of faith in the dollar being lost and wiped away, all like that, right? They're essentially saying, hey, we don't think that the United States is going to be able to service these debts, so we need to get back into the hard money standard, which is scary. Because if once they lose faith, that's when everything collapses. But China is quote unquote hiding these purchases, because China purchased 15 tons of gold in September, or 10x more than officially than, because China, 10x more than officially reported. So China could be hiding something. They could be keeping this secret, and they could be buying other things to keep this secret. But either way, China and all these central banks are moving away from the dollar and moving into hard assets. And China adding even more fuel to the fire, right? January 1st, they're going to implement new exports controlling requiring government license for all silver exports. And this is why I think we need to keep a closer eye on the silver markets than we do on the gold market, because silver has a lot of industrial applications, right? I mean, this is steel right next to me, but we've got probably some silver in this microphone, some silver in this laptop, some silver in this camera. Silver's used in a bunch of different things. That is not just, a monetary metal. Whereas gold very rarely is used outside of just being monetary, right? It has, maybe some jewelry properties or something like that people enjoy. But the reality is that silver has so many different industrial properties that seeing China essentially say, hey, we want to track every time we move silver, That is very interesting. And gold funds saw this 34.2 billion in net inflows in 10 weeks, the most ever recorded. This is insane, right? Money is flooding into these precious metals, most notably silver. And these charts, I mean, it looks like silver honestly looks like a meme coin at this point. Like, it's insane the way that it's taking off as it is. And it's shooting up more than gold, twice as much as gold, and 8 times as much as the S&P 500. So as it continues to go on here, right? You got to wonder. I mean, people are asking, is silver a bubble? Is it about to burst? Right? Robert Kiyosaki is saying this. The FOMO mania crash is coming. But he also believes silver is going to $100 in 2026, possibly 200. That's literally doubling, right? That's insane. So yes, be patient, but 57% of retailers expect silver to trade above $100 an ounce. And this is where I start to get worried, because not only do we start to see a bunch of, I guess, like commonalities, people thinking about all of this, right? A lot of people agreeing on this. Once, I mean, generally in markets, right, guys? Once we all start to agree that this is going to happen, markets come and bite you in the ass and do the exact opposite. So this is where I start to get worried, because silver is a very big leading indicator. I do truly believe that if you want to know when a recession is coming, silver is going to spark that way quicker than gold is. So sure, we see gold shooting up, but silver, this silver squeeze mania that we're seeing, this is something that's signaling way more than what the gold market ever could. Make sure you guys are subscribed to the channel, because I'm going to keep covering this. I'm going to keep diving in to all this. But first, we got to go into how these interest rate cuts can dive in. It can change all of this as well. Because not only all of those, right? Not only that, with an interest rate cut, we put more liquidity in the market, we lose more faith in the dollar, and people start selling more government bonds. Dub in the chat is saying they'll ramp up silver and gold production. I appreciate that. They are RA Optics, no free ads, but I do have a sponsored Chroma. If you want, I can tell you guys them. They got some good looking guys. But yes, the little guy retail investors aren't buying bonds. Exactly. They're all-nighter hider. We've got a bunch of people in the chat. Make sure you guys are subscribed to join these awesome guys in the chat. But, you know, when you look at the Dixie and you see how it's doing pretty poorly, right? Year to date, 9%, nearly 10% down. I mean, worst year since 2017, 8 years ago. And then potentially we're going to start to see some hairiness come in the market. You know, this S&P 500, though, on the flip side of it, absolutely skyrocketing, right? We're going to see 7,000 S&P 500 next year. You could take that to the bank. And we're going to see potentially $100 ounce silver. Look, I am a little bit more skeptical on that, because, well, like I said, when 57% of people think of something, I like to think, generally speaking, the opposite happens. But hey, we shall see. I'm going to be covering all this. I got some great videos coming out on this channel that I'm working on editing right now. So be sure you guys are subscribed. Hit that like button for me. Share this one. Help the channel grow. Help me get to 1K. And I'll catch you guys all at the next one.